Let's get back to normal equities. There are 4 different trading styles, and trading styles mainly refers to your time frame or your holding period. So we're talking about a position trader. Someone's going to hold a position, be it in equities or be it in derivatives, especially something like single stock futures, from months to years. So obviously single stock futures up to 3 months, but for equities you can hold it forever. But you're trading more the cycles. So that would be called a position trader. You're not buying and holding, you're trading more the cycle. Buy the low, sell at top, reinvest. Swing trader holds a position from a few days to a few weeks. A day trader would hold a position intraday only. You just can't hold a position overnight. Okay. So there are various factors also involved with your trading style, the account size, the risk capital. So I use the word risk capital. This must be forever savings or forever. You must understand there's risk involved. You can start with a little of 1,000 Rand, consider the costs involved. At PSG Online, our minimum cost is 98 Rand a trade. So with 10,000 Rand, your share has to move up 1% to break even. So obviously the more you trade, the cheaper it becomes. Yeah. Now the time, that's the most important thing. It's not about how much money you're starting with, it's how much time you've got dedicated to trading. And also important is your level of trading experience. Yeah. If you're first a novice, I suggest stay away from the trading side. Learn to become an investor first. Take it more leisurely. I believe you learn to crawl before you walk, before you run. Also important, a very important factor is your personality. If you're more of a cowboy, you'll take more risks. So be aware of those kind of things. And also ultimately your risk tolerance. If you're putting your money into a trading account and you haven't started trading it and you can't sleep at night because you're worried about the money, maybe the stock market's not for you. So those are the kind of things I always say, you'd rather put your money in the post office. So let's quickly go to advantages and disadvantages. Buying and selling as a trader, you have the potential to make huge profits. We discussed that already. Especially with derivatives, you get extra gearing. Accessibility, you get a wide range of shares to trade from, and obviously the big advantage is liquidity. I can move easy into cash. Other traders can take it away from me, can buy it from me. So that makes it a very, very attractive vehicle for many traders. On the disadvantage side, trading, if you've got small amounts of funds in a trading account, you must understand you'll have high brokerage costs. Take that in consideration. Yes, there are risks involved, and we've spoken about already how to mitigate that using stop loss, position sizing, and things like that. So again, do your homework on the shares and things like that. Obviously, with derivatives, there's additional risk involved. It's called margin calls. You can not only lose your initial margin, you can lose much more than that. So risk management, very, very important. Okay, so what tools do you need? Very similar to investor. Obviously, what's more important now is alerts, that kind of stuff. You need charting software. We have our own software, and there are a lot of other packages out there. Again, there's a lot of education available for you guys, and it's for free. Okay, trading newsletters, trading forums, and things like that. All go to our website. Okay. So I've run out of time, so just quickly to summarize, and I think this is the easiest way to summarize it, compare the two of them. Understand as an investor, as passive management, and this is what I was talking about just now. The difference between investing and a trader is your time horizon, not only the amount of time involved, but your time horizon. I know there was a question that came through just now about the 3-year rule. The idea that we use anything more than 3 years. You buy and hold a share, and you hold it for at least 3 years, and decide after 3 years to decide to sell that share, then capital gains tax applies after 3 years. Okay, that's why I use that number. Anything with less than 3 years, obviously income tax applies. So the idea of investor buy and hold strategy, building a good quality portfolio of undervalued shares. I mentioned just now, balanced portfolio, financials, industrials, resource stocks. You're concentrating more on the fundamental analysis. My goal is still capital growth as well as income from my dividends. You're going to use risk management in the form of quality, the structure of your portfolio, and the spread. Obviously, by buying and holding, my costs are much lower. And I mentioned just now the added advantage is capital gains tax is much less than income tax. Other side of the coin, a trader is an active management. You're involved in watching on a daily basis. And this is anything less than 3 years. We spoke about the 3 different styles. You're using more of the charts, technical analysis. Yes, your goal is still capital growth, but you're using more stop loss facilities, more protection stops. If you're buying and selling, understand there's more costs involved. So you must put that into your equation. And ultimately, also, any profit you make is deemed income. So obviously, you have to add that into your income tax at the end of the year. So to separate the two of them, I always suggest to people have two portfolios. Have a capital portfolio and have an income portfolio. And at PSG Online, we're allowed to have more than one account. One login, one platform, two accounts. Okay. So there's only, you only pay the admin fee once. Okay. That's the main thing. And it's easier just to declare to the receiver, this is capital, this is income. Remember, you can't be taxed if you haven't sold anything. Okay. So in conclusion, people, time to research is your most important resource. Obviously, risk tolerance is also very important, and your financial objectives. So starting capital, yes, people might say is important, but more the time. Okay, you can start a little bit and then build up from there. But also, obviously, your knowledge and skill, that's your also investment if you're starting out as a novice. So the question is, investor or trader? Our recommendation is to be both. Okay. So you should be getting a link to this presentation emailed to you soon, as well as a recording if you're on this presentation. So from my side, I'd like to say thank you. Any questions, you can also send us on our Facebook and our Twitter pages. And then when you get this presentation, you'll see there'll be additional webinars coming up and things like that. So let's handle any questions you guys might have.